Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always with the University of Missouri's Ben Brown. How's it going, Ben?
Going well. How are you, Will?
Doing all right. Enjoying the fall weather out here in Ohio. A little rainy, a little misty, and a little chilly. So a little bit of everything.
Now, is that chili as in cold or chili as in the food?
I wish it was the food, but no, it's been in the mid 40s, maybe low 50s throughout most of the day today. But I honestly enjoy it for the most part, so can't
Well,
complain.
not to brag, but I've had chili this week, so
Well, maybe I'll make some as we go forward. Ben, I don't want to waste too much time here talking about chili whenever we're seeing markets that were slightly warmer coming into this week, some slight gains across the board. Just a quick rundown of what we've seen so far. December 23 corn up 2 cents on the week at 4.90. December 24 up 1 cent at 5.17. November 23 soybeans up 22 cents at 12.86. And November 24 soybeans up 5 cents at 12.55. The soybean oil complex saw some gains on the cents per pound basis, up 2.97 cents to 55.90. Soybean meal by the short ton up $15.60 at 390.20. And then the wheat market saw some spread action there. We saw December wheat up 5 cents for the 2023 year at 5.77, and then July 24 wheat down 6 cents at 6.34, and then some light gains on the crude oil front, up $1.10 at 85.70 for that November contract. So Ben, what are your initial thoughts as you see some of this upward movement and then some spread action on wheat?
sure. So I think my first comment here was, are we seeing, maybe one last good rally in the soybean market left in 2023? Soybean prices have dropped $1 relative to where we were just 6 weeks ago. They've dropped well below that spring insurance guarantee. As we look ahead, the picture kind of looks a little bearish as we start to look at 2024. So the question is, can we get one more good soybean rally in here 2023 for some producers to price some product? And we might be seeing it right now. We might be seeing the early stages in this latest rally.
Well, looking at that, coming out of USDA, we saw a little bit of an adjustment last week in those USDA reports, a drop on expected production for corn and soybeans. So is that fueling much of this slight upward push that we're watching right now?
Yeah, it is. So we had some yield cuts both for corn and soybeans to the domestic crop that, the market and traders heading into the report largely projected that the supply would fall. However, I think, you look at this and you say, was the market reaction purely based domestically? And I'm not really sure that there was enough drop in that domestic soybean price to cause the big rally that we've seen.
So more than just domestic. Yeah.
Yeah. And so I think it was more than just domestic.
So, okay, well, talking about more than just domestic, that kind of hints into some international occurrences. So what else around the world right now is going on to really push that forward?
So absolutely. So the most surprising number to me in terms of things I didn't see coming came on the global soybean balance sheet. We saw Chinese beginning stocks coming into the year decrease about 1 million metric tons. At the same time, we saw an increase in Chinese consumption for feed use, right? That crush capacity for feed use. And to me, that shows promise, right? That the China's soybean demand industry is starting to rebound. Earlier in this year, pork margins were so low that it was really kind of creating a drag on the feed market, or those crushing margins for soybean producers. Now that we've seen, pork prices kind of stabilize a little bit, we're starting to see soybean meal inclusion rates back into feed kind of recover. And as a result, I think the expectation is that we're going to see more soybean crush in that Chinese market. And USDA hinted at that, but that really, that shrunk that global soybean ending stocks number almost 4 million metric tons. Now, granted, we still have a 14 million metric ton, or a 14% increase in global supplies year over year, but a tightening from where we were just a month ago.
So recapping that, looking at the Chinese front, they have a little bit less soybeans coming into the market. They have a little bit more feed use. So, a hole to be filled there potentially. You said about 4 million metric tons on the soybean front. but that doesn't necessarily equate to just U.S. sales. So what's the significance of this right now for U.S. producers?
Yeah, so it is signaling to me that we could see greater purchases by the Chinese later this year. We've seen them buy aggressively over the last couple of weeks, both from the United States and Brazil. Again, this is a period of time where the U.S. dominates. The fact that Brazil is playing in this market too represents one, just how significant of a crop, or the sizable crop that Brazil grew last year, that they still have beans to sell into the market. And then two, China's desire to diversify away from a country specific supplier, or dominated country specific supplier like the US, diversify where they're buying product. But I do hope and think that now that US soybeans are starting to become more competitive, that we start to see better sales, and as a result, better export inspections in the weeks ahead.
Well, just on export inspections and looking at the export market as a whole, we've seen soft red winter wheat exports really be supportive overall to the wheat complex. How much fuel does that have in it to continue to do so?
Yeah, great question. Actually, we don't talk a whole lot about wheat, but in this case, wheat is also an important player. The soft red winter wheat states, those that produce that category of wheat, had a great year. Many of those eastern states produced record production of soft red winter wheat. So we have the product to ship, and it's finding homes in some of our international markets. China has been a big buyer of soft red winter wheat here the last couple of weeks, along with some other more traditional partners. But I think that market probably has a little bit shorter of a runway. U.S. wheat is traditionally not the preferred wheat in the global market, but we found some buyers here as of late to buy that product and that surplus that we have.
Well, and Ben, I don't want to run out of time here before we get to talk about your favorite report, maybe the NOPA report, looking at the National Oilseed Processors Association crush margins for soybeans. We saw a record for September. How significant is that as we move forward?
Yeah, so at 165.5 million bushels here in September, that was an all-time, that was a record for the month of September, an all-time record for the month. And then as we look on the soybean oil side, soybean oil stocks now reaching their lowest level since December of 2014. So I think this plays a little bit into our soil oil prices that you talked about a little bit earlier. I think there's a little bit more room in that market to maybe see a few cents higher here as we look over the next couple of weeks, just as the supply, or at least the domestic supplies of soybean oil, are starting to tighten again. Granted, we're gonna turn the corner here as harvest starts and our crush volumes start getting up to 180, 190 million bushels. But I think that as we look at the balance sheets as they sit today, soybean crush has a opportunity to continue to increase. Now, unfortunately, I think some of that's going to be offset by declines in the export front as we move through this calendar year. But certainly, I think here in the next couple of months, we could see some very, very strong soybean crush numbers. And I wouldn't be surprised if we're not talking about a record October crush come, November 15th, right? So,
well, Ben, just on that, you said there's the potential for that soybean oil market to gain even a few more cents. It's up almost $3 on the week already. So as we see maybe these record crush numbers come in, or I'm sorry, I'm kind of mixing and matching, but do you see that I guess holding that down as you move forward? I guess what will it take for that price to kind of level out before it stops gaining?
Well, more production. I think the demand side of the equation is certainly moving ahead at a pretty fast clip. We continue to see renewable diesel dominate the diesel market in California. We've seen a couple other states that renewable diesel is now becoming even the major source of diesel fuel. Right? It's not just even a player. It's now the majority, if you will. And so demand's not slowing down. I think supply is going to have to continue to increase to keep up. We've seen the investment in crushing capacity. We've seen the just completely shut off. I mean, they're not shut off. That's a poor choice of words, but we don't export soybean oil anymore. And part of the reason for that is we found uses for it here, and domestic buyers are buying it before it can be exported. So that's the picture right now on that soybean oil front.
All right, Ben, as we look forward to the rest of this week, what should farmers and ranchers be paying attention to?
Yeah, so a lot of normal reports this week. On Friday, we do have cattle on feed at 2 o'clock p.m. And then next week, when we get around to crop progress next Monday, I'll be very interested to see where we're at on harvest progress. I think there's a couple of places that are starting to linger a little bit. I think that really starts to impact that soft red winter wheat market. Again, we've talked about good exports. If we maybe see some production shortfalls in that market heading into next year, maybe a little bit of a rally in the soft red winter wheat market as well.
So Ben, I want you to say soft red winter wheat 10 times as fast as you can.
It is hard to say,
It is
actually.
kind of hard to say. But all right, as we close out, viewers, listeners, if you'd like to learn more about us, what we do, or our sister program, the weekly livestock market update, you can find all of that at brownfieldagnews.com. Ben, thank you for joining us again today. I'm Will Robinson on Brownfield.